Morgan Stanley seems to be putting out a newsletter every week, or a letter, if you will, every single week about Tesla. I think the one that, however, they put out today is well worth a very hard look. Wherever you are in your Tesla investment journey, I'm going to suggest that this episode today, I'm going to be talking about this letter. It is a positive yet balanced look at how one Wall Street investment house who is bullish on Tesla sees the future. I'm not going to agree with every bit of it. I can assure you, and I'll tell you where I agree and don't agree. Now, I'm going to cover that letter first for those of you who don't have time to hear the entire video today. In general, equities in the pre-market are down. Bonds are up in the pre-market thus far. So therefore, the interest rates are down. And we'll detail all of that at the end as usual. All right, this is Randy Kirk. Hit like, hit subscribe, and hit notify. Undoubtedly, you've noticed Larry Goldberg is not co-hosting tonight. He was called away, and he'll be visiting with us tomorrow night, which will not be his normal night. His regular night will be Monday night, but this week he'll be joining us on Tuesday instead. So look forward to that for tomorrow. And then earlier today, Brian and White had a great discussion on growth. And so you may want to go take a look at that. I'll put a card down below. I'll put down below, I will put a card up above. Something like that. Anyway, and then he'll be back again tomorrow with a big update on some issues I've had with regard to factory utilization as it impacts the Model 3 Plus, as it impacts the Model Y, as it impacts the new Gen 3. I think you're going to find that things are shifting a little bit. So that might be really interesting to watch. And then if you get a lot, I've had so many orders today. Thank you for sending in your orders. We are getting close to Christmas. This is a perfect gift. Multiple orders today, some of them for multiple pieces. Remember, $25 for one, $45 for two, $60 for three, 65. All this information is down below in the description if you want to look for it there. Even if you want 10, that's $210. And of course, if you join Patreon, you get one for free. So let's move on. All right, here is the Morgan's. Now, I've just taken a piece of this Morgan Stanley letter. It's not the whole thing, but it's the part I thought that was the most important. Macro aside, for Tesla shares to avoid the next price move being down, investors like them must have confidence in the company's ability to grow earnings and address new markets, both within and beyond core auto. Tesla investor sentiment is low right now, but that's not enough by itself to halt the negative momentum. In other words, he's saying sentiment is low, and so the stock right now is low priced, but if the sentiment doesn't shift, it could go even lower. That's what their point of view is. I don't think that's incorrect, except for the fact that I think that it might all be priced in at this point. And I think he kind of makes that point himself in another part of the letter that we're not going to talk about today. Anyway, Tesla is one of the world's most vertically integrated manufacturers, and its TAM today is totally dominated by one-time point-of-sale auto business. Core to our overweight thesis, which is at 380, is the ability that for Tesla to move the needle incrementally towards more capital-light models and incrementally away from the auto business. While we do expect autos will be the majority of Tesla's revenues for the next decade, we believe software content and licensing opportunities will become increasingly important to the model, and as well as an expansion into markets beyond the point of sale of vehicles. A tenfold increase in monthly active users represented by its addition of cars over time today will give it an important opportunity to get all this SaaS business. All right, so what they've said and what I agree and what I disagree with is, yes, the Tesla is going to be moving away from just the auto business, but it's also going to be moving very strongly into energy and into another hardware product called robots. So it's not all going to be just a bunch of licenses and things of this nature. Now, that's great. I think those things are going to happen. I'm glad they think it's going to happen. but the energy business is going to be massive and it's going to be impactful very, very soon. It's already impacting every single quarter. It's doubling in profit. And I think that will continue for years into the future. And it's it's a very big deal. On the other side of the coin, of course, we're all looking forward to the day when there might be licenses. We're looking forward to the day when FSD is 100% working. And we can get into the robotaxi business, which is kind of a, somewhat of a software, somewhat of a hardware business, kind of a combination. Anyway, so all those things are true, but I think he's completely underestimating the energy business and energy storage business. I think he's completely not even contemplating the robot business. All right. So at the current share price of $215, it's about $220 right now. Tesla trades at 55 times consensus full year 24 PE. As is typical for Tesla, the level of investor sentiment tends to follow the share price in both directions. The drop, in other words, the sentiment, I call it the narrative. So Tesla tends to swing wildly based on how people are feeling about the stock at any given time. A drop in Tesla's shares has influenced investor sentiment, reinforcing the share price move. In recent days, a number of Tesla exposed suppliers have commented on Tesla's significantly dialed back fourth quarter and early 2024 production outlook. Now that's news, okay? I hadn't heard that from anybody until this very minute. Don't know where he's getting his information, whether he is doing his own reporting or whether he is seeing other reporting that I'm missing somehow. I'm not hearing that from people like Brian White, who was just on today, who typically has those kind of conversations. I don't know. I'm not clear on that, but pretty much everybody right now is expecting 500,000 units in the fourth quarter, and I can't imagine that it'll be less than that in the first quarter. All right. In our opinion, for Tesla stock to halt its slide and reestablish leadership, investors will need to see one of these four things happening. Number one, stop missing numbers. Tesla's full year 24 consensus forecast was at $7.30 12 months ago. So this is the street believed that Tesla would hit $7.30 a share 12 months ago. This fell to $4.87 by June 23 and currently sits at $3.94. If you saw my video, I think it was about a week ago, I went into great detail to show there is absolutely no way that Tesla does less than $17 billion in profit next year, which would be over $5 a share. And then if anything other than that hugely conservative way that I approached it turns out to be true, they should be making back much closer to that $7.30. And of course, that would certainly solve his problem on this particular number one. Number two, execute the model expansion beyond SX3Y. The Cybertruck bar has been significantly lowered. While we continue to view the model as relatively insignificant within the grand scope of Tesla's future portfolio, we would not underestimate the impact on the launch/ramp execution on sentiment. So let me see if I can unwrap that just a little bit. He says, look, long-term, the truck is not going to be a big part of the total dollar volume. And it's true. It might only be like 1% of the numbers that I'm looking for in the future. But short-term, over the next 12 months, 18 months, 24 months, 36 months, the Cybertruck is going to have not only an impact in terms of revenue and in terms of profits, but it will also have impact in terms of this halo effect and generating a lot of eyeballs that are interested in other things that Tesla is doing, including even buying the stock, okay? There's going to be people who see the Cybertruck, see the reviews, see all the excitement, see all the interest, and will be looking into buying the stock, even if they don't buy a Tesla product at this time. All right, so, and I agree with it. So in general, I see what he's saying, and I think that's going to be true. Expand the TAM incrementally towards more capital-light businesses. We believe Tesla's business model is at maximum capital intensity and maximum auto today. Over the next 6 to 12 months, we'd look for further evidence of the business model moving towards capital-light projects, licensing and software that have relevance beyond the auto market. Well, I think that that's going to happen. There's a lot of that happens even within the energy sector, where they have ongoing relationships after they put the hardware in. It certainly happens with the car, as he points out. the more cars out there, there's more $10 a month and other kinds of SaaS that will be coming, over time, and of course FSD and Robotaxi, which is his main thing that he wants to see happen. Obviously, is that, but he thinks the licensing is going to be a big part of what takes place in the future. Now, this next paragraph was cut off a little bit, so hopefully we can get what's happening here. Number 4, idiosyncratic narrative change. For Tesla to defend its current multiple, we believe the company must show a credible link to the AI theme through tangible products that drive improved consumer experience in autos. Okay, so yeah, I mean, what happened today? Or actually over the weekend. So we've got this new AI product coming out. It's an X product. It's not a Tesla product, but it is integrated and part of the Tesla scheme. Obviously, I don't know if he's giving any credence at all to the whole Dojo thing, but Elon is spending $1 billion on Dojo next year, and that doesn't count what he's paying on NVIDIA clusters. So this is going to be a big part of the future. And yes, there will be massive amounts of revenue being driven. All right, so that is the Morgan Stanley letter. I thought that was well worth my time, and hopefully it was worth your time. So my buddy Jeremy Siegel, he's my guy, man, and we are exactly on the same page. And today he said this on CNBC. I think Jay Powell has to be on high alert because we did get some weak data, certainly on the jobless claims and certainly on the Friday jobs report. The Fed cannot screw up. Hear that now. The Fed cannot screw up the way it did on inflation by waiting a year too late. Now, I'm not saying we're going to have a recession, but he's got to be very alert to evidences of a slowdown. So he is calling on Fed Chair Powell to begin to cut rates way sooner than the expectations of the market and the way that it's sounding from the Fed's comments. I'm sure he would be saying the cutting should probably begin in January or February. I think most people are thinking that there should be 150 basis point cut during the course of next year. It can be slow, can be every other month. I don't know, but that's what he's saying. So completely overlooked today was this story on CNBC. The consumer is not maxed out. They're actually reducing their overall credit and managing credit pretty well, according to VantageScore CEO Silvio Tavares. He told that to CNBC in a recent exclusive interview. The reality is the consumer is actually quite healthy. Despite the $1 trillion credit card debt, which everybody is, oh my gosh, there's over $1 trillion in credit card debt now, the average VantageScore credit score held steady in September for the 3rd consecutive month at 701, which is a good score. That's up 4 points from the same month last year. Meanwhile, the national average FICO score rose 2 points from a year ago to reach a new high of 718, according to the latest report. So, Bank of America has been saying it. Other people have been saying it. The consumer is in fine shape. There's not a problem. The consumer is able to spend. Now, if the jobs start disappearing, it's not going to take very long before people will start pulling back. Even if they're in great shape, they'll stop buying. And if they stop buying, then people don't have to make things or provide more services or hire more people to provide services, and you can get a spiraling down, all right? So Lucid enters into an agreement to use NACS on its cars. Now this little tiny car company is of absolutely no consequence related to the almost universal now acceptance of the NACS standard. It would seem that they were resisting, however, with every bone in their body, but they finally had to capitulate. I think that only leaves Volkswagen and Stellantis as holdouts with regard to the NACS standard. I say the NACS standard, which is a redundancy because the last letter is anyway. Microsoft had their AI day today, and they unveiled a nice list of new features and programs for ChatGPT 4. Primarily, they have moved the content date that they're now up to May 23rd. They were May of 23. They had previously been up to only February of 22. So now when you're going in there, it will look at data that they've been able to pile in from the internet through May of 23. They also can take a much larger input. Previously, they can only take, I forget how many words, but now they can take a book length input. You can put in, so I don't know whether it be like 40,000 words or 50,000 words. You can put it in all at once and it can respond to a book length input. So those are a couple of the, there's many, many more. And you might, oh, they also said they have some price cuts for business and enterprise clients. There's plenty of articles out right now on that. If you're interested to know what other things ChatGPT-4 can do, it's easy to find those things. Brian White's video, not the one he did on my channel, but the one he did on his channel, that video from earlier today about Grok was reposted by Dr. Know-It-All, another friend of the channel and co-author of the book, The Elon Musk Mission, Why Haven't You Bought Yours Yet? And the repost was responded to by Elon Musk himself. So congrats to both of them for getting a nod from the boss. He was actually agreeing to the idea put out in that video and by Dr. Know-It-All earlier this weekend in his video that there's a huge potential for profits through Grok for X.AI, therefore all of X, for Tesla and for Tesla owners through various ways. But the main one would be accumulating all of our computers in our cars into one giant computer that could do all kinds of things that you can't do, you know, on even a supercomputer. All right. What about the current status of the markets? Let's take a look really quick. We have Tesla in after hours now down $1.42. It was down 69 cents during the course of the day. Just for fun, I'll look at, let's just take Google, which was up $1. It's also down on the after hours. I'm not going to go through all of them. You can look it up yourself if it matters that much. We had all of the Cathie Woods pretty much all across the board down today, except for Square, which was up pretty nicely. And then let's go in and take a look at the rest of the data. We have got, okay, what we've got so far is we have the pre-market, the Dow is down 59, S&P is down 8, NASDAQ futures down 23. We have got the Bitcoin down 176, back down under 35 again. We've got the dollar rebounding a little bit. Why? Because the bonds were today. They were there was a sell-off, you know, with the profit taking, which is pretty much why Tesla was down today. And then now what we have after hours, though, is we've got that reversing. Gold is down 520, now down to 1983. It's dropped almost 10%. I'm sorry, 1% in the last few days. And then oil, is completely unchanged. It's $81. As you know, I love that price. And what we have is bond yields now down 3 basis points after being up a total of, I think, I forget how much it was up earlier today, but it's now down 3 in the pre-market. So we could look forward to maybe tomorrow. I mean, right now you'd think that the stocks, the stock indexes would be going up and Tesla will be going up on this news. But, you know, there are many moving parts. So anyway, you know what to do. If you haven't already done it, hit the like and subscribe. And hit notify because you're going to want to be notified about all the shows tomorrow. Larry will be on tomorrow night. I'm sure he'll be on tomorrow night. And then Brian and my video earlier today, I'm going to put that card right here. And then I'm going to just remind you again about getting yourself your Cybertruck. And also joining Patreon. Thank you very much for more folks joining up on Patreon. Had a great month in what was that, October, the month we just had. Had a great month in October. Lots of folks joining Patreon. I thank you very much for that. And we could certainly use some more if you're interested in getting that regular news broadcast during the day and seeing what's happening as quickly as it happens, along with my analysis. All right, and of course you can get a free book or you can get a free Cybertruck if you, depending on which level you join. All in the information down below in the description. Okay, I think that's all. Can you think of anything else I need to talk about? Nope, I think we're done. And it has been great, really great, super great talking to you.